Hello there and welcome to Market Insight for a fine Monday morning here in the city of Lagos. You're still watching SOUQ News Television and I am David Chiedu. This morning we're talking about the planned or proposed increase in VAT and the economic implications therein. But before we go on with that, let's quickly take a look at the trading floor of the NGX ended October 25, 2024. That's Friday. Of course, at the end of the last weekday of trading at the NGX, a total of 460,859,151 shares in 8,772 deals, corresponding to a market value of 9,526,373,975 naira 77 copper were traded. Compared with the previous NGX trading day, that was Thursday, October 24, Friday's data showed a 15% improvement in volume, a 39% decline in turnover, and a 5% decline in deals. The current market capitalization of the Nigerian Stock Exchange is 60.3 trillion naira. Now with a look at the aggregate, 117 NGX listed equities participated in trading, ending with 40 gainers and 14 losers. CAP led the gainers, that is CAP, led the gainers with 10% share price appreciation, closing at 38 naira 50 kobo per share, followed by livestock feeds going up 10%, Unicell Interlinked going up 9.72%, and May and Baker Nigeria going up 9.56%. On the losing side, however, Dar Communications came out last with an end-of-day price depreciation of 9.86% and 0.64 naira per share, followed by McNichols at 5.1% in the negative, that is, and FTN Cocoa Processors going down 4.76%, and Fidelity Bank going down a negative 2.75% as well. Shams recorded the highest volume of 97.5 million naira, but 97.7 million traded shares, followed by United Bank for Africa, 88.5 million, Sterling Bank at 32.3 million, and Axis Holdings at 28.2 million. Regarding the performance of the NGX market indices, the benchmark NGX All Share Index climbed 258.96 or 0.26% points to close at 99,448.91, representing a one-week gain of 1.41%, a four-week gain as well of 0.94%, and an overall year-to-date gain of 33%. Other remarkable indices that performed were the NGX Top 30 Index Insurance, the Banking Index, the Main Board Index, the Oil and Gas Index, as well as the Consumer Goods Index. And that's what it looked like on the floor of the NGX for last week, ended Friday, October 25. Before we get on with the conversation, let's touch base with some of the trends in Nigeria's FX market. So the naira has faced sustained depreciation throughout 2024, losing over 50% of its value since the start of the year in the official market. Now, back in January, the currency traded at 838 naira 95 kobo to a dollar and breached the 1,500 naira to a dollar mark in February, just a month after. And this saw it be that way after a brief rally in March, and it recovered to 1,300 naira to a dollar to reach a record low of 1,660 naira to a dollar in October. In the parallel market, however, it started the year at 1,215 naira per dollar and continued the rally until it reached an all-time low of 1,880 naira for the very first time in February. Afterwards, it's recovered to 1,110 naira in April and continued its downward trajectory to its recent drop into the 1,700 threshold to date, where it currently sits at 1,600 naira at the official market and 1,740 naira at the parallel market. To get a sense of these and more, we're joined this morning by Mr. Oluwatosin Oladetan joins us. He's a public affairs, public policy expert and a financial analyst. Mr. Oladetan, thank you for joining us. Good morning.
Good morning. Can you hear me clearly?
Yes, I can hear you clearly. If you could speak up a little bit, it would totally work out for us. But let's get straight to it. Now, the gap between the parallel market rate and the official market rate keeps widening recently, despite sundry monetary interventions by the Central Bank of Nigeria. We've also seen a few upticks or surge in Forex transactions lately. What are your thoughts on this?
So basically, let's look at the play within the foreign exchange market. We've seen that over the last couple of months, the CBN has been very bullish in increasing the external reserve. So currently, as at October, the external reserve is like about $40.2 billion. Of course, we also have that the external debt is also like about $16.3 billion. So that simply says that the central bank has been trying as much as possible to have a stronger position and reduce their need to intervene in the FX market. So we've not seen the retail Dutch auction, we've not seen the wholesale Dutch auction over the last 1 month, looking for the naira to find its true course. So I think the naira is still relatively stable at that particular point, although it could devalue further, because if you look at the core drivers of the FX, we are having less import. We have a need to import less of petrol or the produce from crude oil, which is account for like over 60% of Nigerian import, because of the fact that we have Dangote refinery in full operations, although there's still been a bit of tussle within that particular space. But what are we likely to see if the central bank does not intervene in any way? The FX can devalue to like about 2,000 before the end of the year. But if the CBN intervene, in which a lot of people have been calling for to peg at least even the export, to make export quite inducive or incentive for others to peg the export, the custom rate at 1,000, the economy can see a bit of rebound. Because if you look at it over the last time the NPR raised, a lot of us were shocked that the NPR was also increased by 50 basis points to 27.25% from 26.75%. So it's really a struggling time for businesses in Nigeria. The numbers of imports is reducing, export is not also quite bullish as it is. A lot of people say that we have a net trade surplus this time around, and the net trade surplus is simply because of the further devaluation of the naira. If you look at it, as at last year, December, the naira to the dollar exchange rate was like around 830, 820, but now it's like about 1,636 as at close of business on Friday, which means that it's not a favorable market, it's indeed a tough market. So can we bring it back to 1,000, right? Or something below that? It will require a bit of CBN intervention, but I think CBN is trying to ease off and not intervene fully within the market. So if things goes as it is and the business is still a bit more tightened, we should expect to close the year at around 2,000 naira to a dollar window. Thank you.
All right. Now, you've talked about, you made reference rather to the CBN's increments of the MPR and all of that. That one, at the time it did happen, even, a couple of weeks after it did happen, it got so many criticisms from, economists rather, and the likes. But recently, the IMF has come out to say that there is a semblance of steadiness in the naira, and part of that is, being attributed to what the CBN did with, what we're talking about that happened last month. Is there a chance that the CBN could have gotten it right? What do you make of this?
I think the only thing CBN is currently doing now is to ensure that Nigeria is in a stronger position to increase our external debt. So before the likes of IMF, before the likes of World Bank are able to give you a loan, they will give you a lot of conditions precedent that you should not some things like free float of the naira, less subsidy, increase of tax and all that. So I think the CBN and the federal government is just playing to the books or playing to the rhythm that is dictated to them by the IMF and the World Bank, and they are not really driving businesses or making businesses sustainable within the space. The same IMF said last week that, oh, they were not the one that told the Nigerian government to allow subsidy or increase hunger and poverty. So it depends what exactly the CBN are, what's the core intention of the CBN and what's the core intention of the federal government. Do you really want to incentivize businesses within Nigeria? Then you should do something much more constructive. At least if you can peg the exports, if you can peg the export to at least the 1,000 to thereabout, we should be able to see much more export. To import now, it is more costly to import within Nigeria, not because there are not businesses within Nigeria or we cannot generate those trade within Nigeria, but it is much more costly. And also, if you look at the crude oil, which is our major source of export within Nigeria, the prices has also been reducing. It closed last week at within the $70 to $75 per barrel range, which means that it is not lucrative for Nigeria to be able to generate much more business. But if the CBN continue to do this route, the naira will continue to devalue further. We expect it to close like about 2,000. We will have subsistent increase in the monetary policy rate and further free float of the naira, but that is not going to really support businesses in Nigeria. As we saw that the fuel price has increased from 200 as at May 2023 to like over 1,000 naira. Over 92% of the people that use fuel have demand for petrol in Nigeria has reduced, which is putting a threat to over 10,000 filling stations going out of the market and also closing down businesses. It's indeed a tough time within the Nigerian business space as we speak. So does the CBN want to advance or make it much more incentive for businesses to thrive, or does the CBN want to continually to play to the book of this IMF and the World Bank so that they can increase the external debt, which is not favorable for Nigeria? That is the question I think the federal government and the governor of the central bank need to answer.
Now, the naira's trajectory essentially remains closely tied to macroeconomic factors. We're talking about inflationary pressures and whatnot. So right now, given the global, oil prices pegged currently at between $79 to $81 per barrel, and we're also seeing, interventions by the CBN, which we have talked about. In your view, do you see a potential for a short-term recovery? I mean, we have the naira breaching the 1,700 naira mark, as it were. Today is 1,740, as far as the FX market is concerned. Do you see a potential short-term recovery?
So the recovery that we could have in the short term is simply for the CBN to intervene now. If the CBN does not intervene now, the other recovery we are expected to see probably before the end of the year is we have lower import of oil, petrol or petrol produce, which accounts for close to 70% of 70% of our imports. If we don't have those imports, then we could see a boost of naira recovery. But I don't think that is a right approach. Do you want to recover after businesses are already dead? Like you said, there's a bit of arbitrage on the CBN side. We are seeing 1636. On the parallel market, we are seeing 1740. We are seeing 1710, as you also mentioned, you just recently displayed. So the core question is what exactly is the CBN's drive, or what exactly is the federal government? What is the fiscal policy language, and what is also the economic policy language in which Dr. Babatope can also speak to? Currently, the fiscal and the monetary policy language that we are seeing within Nigeria is not friendly for businesses. It's more or less to be able to ensure that they are in the right books of the CBN, of the World Bank or the IMF, which they are running to for loans. Another thing that can also affect global economy in the short run is the US election, which is coming in about some number of days, about 15 days from now. They're about November 8th. less than 20 days from now, let me just put it that way, is also because the incoming president, either Donald Trump or Kamala Harris, have different economic policies and have different economic incentives. That is also likely to be able to affect global indices over the long run. But can Nigeria continue to sustain on oil that is sold for $71 per barrel is not sustainable for Nigeria. The only thing that we can expect, whether there's going to be a boom, is probably if the prices increase to about $80 to $90 per barrel. But we see that there's a bit of that might be very tough because we're seeing that there's still war between Israel and Iran. Last week, we observed that the Israeli Prime Minister's residence was destroyed by 3 drones in which the Israel defense interjected to. So we are seeing war in the Middle East, which is likely to not be a favorable conditions. And we've also seen that a lot of businesses are going green and they are leveraging, reducing their dependence on crude or natural gases. They are trying to explore alternative energy like electric vehicles and other sustainable initiatives. So those are some other concerns that we really need to look at. What can give a bit of stability is Dangote supplying the local market with petrol, which reduce our major import of crude oil into Nigeria, and based on the body language of the CBN and the fiscal policy, monetary and fiscal policy. But I think the monetary policy language and fiscal policy language is to support more advances or loans from World Bank and IMF, and not to really advance or make it a friendly environment for businesses to continue to thrive within Nigeria.
All right. Well, thank you very much for your thoughts on that. Many thanks, Mr. Oladetan, for joining us. Tosin Oladetan is a public policy expert and a financial analyst. Has joined us to talk about the current market trends as far as Nigeria's FX market is concerned.